Hello and welcome to this video on the topic of cryptocurrency taxation and regulation. Cryptocurrency is a digital or virtual form of currency that uses cryptography to secure its transactions and control the creation of new units. It operates independently of a central bank and has become increasingly popular in recent years. However, as the popularity and usage of cryptocurrency has grown, governments around the world have started to consider how to regulate and tax it. Cryptocurrency taxation varies depending on the country and the type of transaction. In the United States, for example, cryptocurrency is treated as property for tax purposes. This means that if you sell cryptocurrency for a profit, you must pay capital gains tax on that profit. The tax rate will depend on your income and how long you held the cryptocurrency. Short-term capital gains, which are gains made from holdings held for 1 year or less, are taxed as ordinary income. Long-term capital gains, which are gains made from holdings held for more than 1 year, are taxed at a lower rate. In other countries, like Australia, cryptocurrency is treated as a commodity for tax purposes, and transactions involving cryptocurrency are subject to goods and services tax. It's also important to note that cryptocurrency is not yet a widely accepted form of payment for goods and services, so many countries do not consider it as currency. As for regulation, cryptocurrency has been a topic of much debate among governments, central banks, and financial institutions. Some countries, like Japan and Australia, have established clear regulatory frameworks for cryptocurrency exchanges and initial coin offerings, ICOs. Others, like the United States, have yet to establish a comprehensive regulatory framework, but there are ongoing discussions and efforts to do so. The taxation and regulation of cryptocurrency is still a developing area and can vary greatly depending on the country. It's important for individuals and businesses to stay informed about the latest developments in their jurisdiction and to seek professional advice if necessary. In addition to the taxation and regulation at a national level, there are also international efforts to regulate cryptocurrency. The Financial Action Task Force, FATF, an intergovernmental organization that sets standards and promotes effective implementation of legal, regulatory and operational measures for combating money laundering, terrorist financing, and other related threats to the integrity of the international financial system, has issued guidelines for virtual asset service providers, which include cryptocurrency exchanges. These guidelines require virtual asset service providers to comply with anti-money laundering, AML, and counter-terrorist financing, CTF, regulations, including customer due diligence and reporting of suspicious transactions. The FATF also requires countries to establish a regulatory framework for virtual asset service providers operating within their jurisdiction. However, despite these efforts, cryptocurrency remains a largely unregulated and decentralized asset class. There are concerns about its potential use for money laundering, tax evasion, and other illegal activities. This has led some countries to adopt a more cautious approach to cryptocurrency and to implement strict regulations. In the future, it's likely that cryptocurrency will become more regulated and widely accepted as a legitimate asset class. However, it will take time for countries to develop and implement effective regulatory frameworks, and there may be some growing pains along the way. Cryptocurrency is a complex and evolving asset class, and its taxation and regulation are still being worked out. It's important to stay informed about the latest developments and to seek professional advice if necessary. Thanks again for watching this video on cryptocurrency taxation and regulation. It's also worth noting that some countries have banned cryptocurrency altogether, such as Bangladesh and Nepal. In these countries, using, trading, or mining cryptocurrency can result in severe penalties. However, despite these restrictions, cryptocurrency remains a popular and growing asset class, and it's likely that more countries will follow the lead of Japan and Australia in establishing a regulatory framework for virtual assets. In addition to regulatory developments, there are also technological developments happening in the cryptocurrency space that will likely impact its taxation and regulation in the future. For example, the rise of decentralized finance, DeFi, has introduced new financial products and services that operate on blockchain technology and challenge traditional financial institutions. Governments will have to consider how to regulate these new financial products and services, as well as how to tax the returns generated from these products. This will require a nuanced approach, as many of these products and services operate in a decentralized and global manner, making it challenging for governments to effectively regulate and tax them. In conclusion, cryptocurrency is a rapidly evolving asset class, and its taxation and regulation will likely continue to evolve as well. It's important to stay informed about the latest developments and to seek professional advice if necessary. Thank you again for watching this video on cryptocurrency taxation and regulation.